All right, folks, back again. Wanted to follow up to yesterday's video and just follow up on where we were. We wanted to basically review TradingView in terms of getting clients set up with the general understanding of how the platform works, what are some of the key terms, what are some of the things we look out for, how do phases work, how does resistance work. So generally yesterday was an acclimation video. But given me what happened with the market in terms of a slight turn down, want to review pretty much what we were looking at yesterday at the very time and at this very candle. And this goes into the topic of stop losses, understanding candles, understanding your trading strategy. So let's look at where we were very specifically yesterday. So this is the chart we have before us. This is what we were looking at. We were looking at in terms of phases, phase 1, phase 2, phase 3. And then I'm saying we're going into a new phase, especially given that we've already gone through 3 phases and then we broke past this moving average, which is a key part of our trading strategy. So let me zoom in here. So this is where what we were looking at yesterday. So in terms of candle analysis, this is a very, very strong candle in terms of could the market continue to move up? Could it move down? And what I want to show you is why candle analysis is so important and understanding resistance levels is so important, because there's no question that this level that was identified is a top resistance. And there's an additional one that I previously showed as well, which is an additional resistance. So given the fact that the market resisted that yesterday, indicates that we've got some way to go. There's no question we're in a bear market, but we've got some way to kind of go before we really establish what that bear market is. So again, this is the candle. And then what I want to do is compare this candle to what it ended up being. So you have to run the whole clock out. You can't simply look at where we are in this one candle. And that's another thing about trading strategy. Do you go 2, 3 candles in? How many candles in do you go before you establish a trade? Now, I'll show you in terms of where my clients are in their trades, because they're more long-term, more conservative in their approach. So in that case, you're going to be looking a bit more long-term, and you're already well within the trade and well within profit. So then if you're in profit, how do you deal with stop losses? Or if you're a day trader, and let's say you just got in yesterday, how do you deal with the issue of stop losses? But nonetheless, let's look at where we are today. So let's open this up. Now, here's my screen. Again, this is a 1-day Bitcoin chart. And again, just in terms of reviewing different client types. So there's client types that might have come in down here, or way down here. So that they're fully within profit. So even if they had something go against them, they're still up 14,000. But let's say you're a client that came in more here. How much are you up? You know, so even with yesterday, you're still up by $8,000, $7,000. So again, it depends on what sort of trader you are, what is your general outlook, and what are you trying to accomplish. But let's say you're a short-term trader, possibly swing. If you're in the swings, you're probably in this zone. Or let's say you're into day trading or weekly trading. So now let's look at that. So assuming you're a day trader, and looking at what that chart looked like yesterday. So we had the doji, we had a hangman, and this was the strong bullish move of yesterday. And as you see, at this point, it closed out very low, and then it continued to the next candle to push lower. Now, another thing to look out for is this clock here, right? So right now the price is at 66.5 or 66.6. And there's 12 hours left in this candle. And this is the idea about fractal. We want to understand that the market is certainly fractal. So what we want to look at is this specific candle, this 24-hour candle, 1 day, and see this at different time zones. So I'm going to go ahead and move to a new chart. And what I'm going to do is move to this 30-minute. So that's the dashed line in the middle, and then we've got the two solid lines to the side. And this is how you sort of work your way through time, which is important why you need to have the right sort of chart setup. But nonetheless, we're in the 30-minute now. So looking at this 30-minute, this is sort of where that candle was. So what you saw yesterday was a very strong bullish move up, and then a very sharp move down. Now, again, this is why the conversation about phases is important, because you have to understand that these are individual separate phases and divisions of time. So if you're a long-term trader, you don't care about these little pullbacks. These don't mean anything to you, because let's say, again, you're up, 14,000, or you're up 7,000, 8,000. Now, a $4,000 pullback is something you may concern you, maybe not, just because it comes right back and you're back up 4,000. So maybe you're willing to take those on. But let's look at this candle and why we want to look at the division of time. In terms of trend lines, again, so we're in sort of this upward trend, but then we have internal trends. And within an internal trend, and as well as internal divisions of time, right? This is a cycle in and of itself. This is a cycle in and of itself. This is a cycle in and of itself. Now, again, if you're a long-term, these little ups and downs don't really bother you too much. But if you're a day trader and you want to take advantage of swings, 100% you want to be in this zone. So this is why you want to identify what's the general trend. Does it happen often? And as you can see, it does. So let's say I take these off, right? And we're going into a new thing. We had a breakout. I want to put immediately my trend line there, right? So I want to get, let's say, the bottom of that move. And you could very much see what ended up being a critical trend line and reversal point in the previous cycle was very critical in this one. So again, this is like a phase 1, phase 2, and then phase 3. So there's no question we're in the phase 3. And same thing, once you start to break out, you want to put your trend line. And you kind of want to use the same trend lines each time. So let me put that trend line here. Now here's the thing, when a market is moving, anything that's in a bullish state, we don't necessarily know exactly how far that's going to go, right? So what happened yesterday could have gone to 71. We don't control how far the market goes, right? But what we do know is, well, it's generally bullish, and it in fact was, until it wasn't anymore, right? So that's important. Now, the next thing I want to talk about is stop loss. So let's assume you believe this is a bullish market and then it kind of goes against you. Well, for one, you have an alert on your trend line. You set those alerts. There's no question about setting alerts and creating alerts. So let's say you got an alert that, hey, this thing's going against me. What you immediately want to do is either have that stop loss in place, and let's see, if you're up here, it's less than $1,000, right? We know Bitcoin moves by a lot. But let's say you have $1,000 stop loss. So let's say you got the alert, but your stop loss is at 1,000, right? So that's like how much you're willing to bear. But if you don't have to lose that much and you could kind of take advantage of, not losing as much, you want to go ahead and do that. And so we want to go down to a lower time frame and see, well, what exactly was going on. So again, this is where we are there. So now we're in a 3-minute. So we're in a 3-minute, and we've got our trend line here, which is showing, let's sync globally. So this is a close-up look of that break. And what you see is you have some time to respond. So what you want to do is have a plan. So everybody knows how to win. If things go up, you simply win, and it's easy. The question is, if things go against you, you may still have a winning position. You may still have a winning trend, which there's no question the trend is winning. As many clients are up 15,000. If you have multiple Bitcoin, you're up 30, 40, whatever thousand. But let's say you're short term, and again, it goes against you. Now you've got that $1,000 stop loss, which is at about this red line, which we've already highlighted, right? Now let's look at it. And then it settled there. So there's a lot of people who are selling at this point, and that's what's being represented in this section. Now the next topic is what that looks like. What do these two candles look like on a lower time frame? And that's what's represented here. So this is candle 1, right? That's candle 1 shown up there, and you can see it here, along with the given wicks, right? And then this is candle 2. And let's make that one red, right? So these are two major wick candles going down. So for one, have your stop losses in place. There's no reason to take inordinate amounts of losses. Know where you're going to take your stop loss. All right? So that's the benefit of using trend lines, understanding trends, understanding, well, when am I getting out of a trade? When am I getting into a trade? And this is one of those things where if you are short-term trader, this is an opportunity to go ahead and get out, especially if you see your trend line has been pierced, which, let's see, it's been pierced here, but there hasn't really been any movement below that. And you also know why you wouldn't necessarily get out at this previous time when it touched your trend line is because you understand phases. That's phase 1, that's phase 2, and you're looking for phase 3. You expect that retraction. And that's what we talked about yesterday. Is phase 1 is the bullish move, phase 2 is consolidation and a lot of back and forth action. Then phase 3 is that strong move up, but then a strong move down. So let's say you anticipate that, but you don't know how far that third phase is going to go. You might want to let that run up, but at a certain point, you got to know this could be a take profit level. So even if you're a long-term trader, you're like, all right, I'll take profits here, and then I'll come back in when it resettles down at the bottom. So again, speaking to the issue of, well, when should I get back into this trade? When a market is in trend, again, it could go as far as it wants within that trend for as long as it wants. So let's take this, for example. Let's make this yellow just to highlight it. See, once you have a break of trend and you're in this down cycle, and you know you're in a down cycle, we don't know how far down this market could go. So same thing here. So long as you're under trend, be cautious. Be very cautious when you're under that, and you're not coming back in until you get a break of trend. So many people, and this is what I talked about yesterday was retest. So a market comes down after phase 3 and immediately goes into phase 1. So a lot of people can't deal with these major shifts where we immediately have a down move and then immediately an up move. And it takes experience and time to understand how these work, because it doesn't make sense to a lot of people. If it's down, all right, let it keep going. An object in motion continues in motion. But that's not exactly how the market works. An object in motion will be in motion and then reverse the other way, right? Because that's movement of the market. Nonetheless, so this is what you want to look at going into the next move. So there's no question as far as this cycle is concerned. And again, if you're long-term, it doesn't really matter, but if you're short-term, it does. What you want to look at is this same thing here, right? So now that we know we're sort of in a down phase, this is what we're looking for. And we don't want to simply take losses forever. If you have a stop loss, you're out of there. And guess what? If you did get out at this stop loss, how much did you gain? So, and that was about $3,000, right? So that was about $3,000 of Bitcoin price, which gives you an opportunity to go ahead and buy back in at a lower price. Or again, if you're long term, it doesn't really bother you. You're still up a lot of money. Let's say you got 2-3 contracts in there, you're up $45,000. You're not really worried about it. You want the long move. But this gets into a bit more detail, and I think it's important to analyze these sub moves. And then let's really look at how long was this trade. So that was 6 days, right? And then here's the next one. Let's say 6 days, and let me make that a little clearer. A little clearer here. Okay. So that was 6 days. That's another 6 days and about 7,000 worth of movement, right? So generally, again, and that's why in terms of these general cycles, and I'll highlight it again down here with the RSI. Let's make that white. Let's make that white. So you want to understand what your cycles are, right? And it's very important because let's say this makes a strong move and it breaks this bottom trend line. And you know, okay, well, it's going to another cycle. That thing will cycle down. So again, the market could go as far as it wants, for as long as it wants. But what we do know for an absolute fact is before it continues back up, it has to pass this line. So that's what actually brings a level of comfort. And I guess the more experience you get more comfortable with things because you're like, all right, well, when I get this alert, when it gets here, same thing here. Let's make that yellow, right? Make that a little bit larger. What I'm looking for is at some point, the market has to come up against this trend line and get over it and retest. And then you're going to do the same thing. So, okay, I'm willing to get in at this point, but maybe I'll put my stop loss down here. Because just because it comes back in and starts to retest doesn't mean it's not going to come all the way down. So you have to know when am I getting in, when am I getting out? And this is called good money management. You have to manage the money that you're trading with. And that's how you do it, is effective stop losses. We don't want to run it down and see how far it goes. Because here's the thing, it could go down to 40 under this trend line, and it could pierce it for a bit and then continue. So showing this, right? And some people even do that. So let me make this dashed. They'll put another trend line on that, and they might not come in, they might not even come in here. They're going to wait till it comes here, right? So let me move this up. This is their entry point. Now that's a much higher probability play, and that's when you get into that conversation about high probability plays. And you could just come in safe for a nice 3,500 without risking, I don't know how far. Like, this is definitely not the place to come in. Especially on the short term, there's just no reason to. Wait until you get some confirmations, and then let's say even if it comes out of that, same thing, right? So right now, this is a trend line, right? So it has to break this, and then this is our main one. It has to break that. And then we have sufficient guidelines in place for stop losses and things of that nature. And we do what we have to do. We manage the funds and we move forward. So I just wanted to touch back in with that. We're going into a bit more detail, a bit more analysis about, again, which sort of trader you are, understanding trends, understanding sub-trends within the trend, understanding sub-cycles, and also obviously stop losses, understanding candle movement. And these are the things that over time you become a professional trader. A lot of people, I don't know how many people become professional traders overnight. Most people, it's 5 years, it's 10 years, it's 15 years. And these are some of the conservative things you can do to put you in a long-term position to win. So thank you very much on that. Just wanted to touch base, and we'll continue in the next one. Thank you.